For those of you here who I have not yet met, my name is David Sung, President at Nicola Wealth Management, and it's my pleasure to welcome you all this evening to our 2015 Market Outlook. Now, as I look into the audience, it's great to see a mix of new faces as well as the familiar faces of some very long-time clients and friends and professional advisors. 2014-2015 marks our 20th year in operation, and over that time we've grown. We've gone from a six-person, Vancouver-based operation managing $80 million in assets in 1994 to a 120-person operation. Now, in addition to our Vancouver and our Kelowna office, this also includes the opening of our Toronto and our Richmond offices last year. Now, speaking of Richmond, in case some of you might have been curious about the person next to you wearing a sort of United Nations-style headset, we opened our Richmond office to help us serve our growing Chinese language clientele. And our advisor and partner in our Richmond office, Joey Zhang, located in that booth in the back corner of the room, has been tasked with we'll call it the opportunity, of doing the language and audio translation this evening. So I certainly wish you luck, Joey, trying to keep up with the pace of John and Rob's PowerPoint presentation. Now, over these past 20 years, we've certainly seen some cycles. We've seen some bull markets and some bear markets. We've had a technology bubble. We've had a great recession kicked off by a spectacular U.S. mortgage and housing meltdown, and we've had some pretty great and significant changes, especially recently, in currency values. Now, each one of these events, for most of us, I think we'd all agree, highly unpredictable. But each one of these events, or something similar to them, almost inevitably due to occur again in the future. So over these past 20 years, we've come to sort of have a feel for a certain truism, one that's probably all too familiar for us. The more things change, the more things stay the same. I thought the following cartoon was fitting. I'll read it to you. Today, the stock market sputtered, dropped ominously, plunged to new lows. Then suddenly, it showed signs of life. It rebounded, it recovered miraculously, then it dipped and ended the day unchanged from yesterday. Now, ironically, one of the only true constants over this past 20 years has been volatility. But it's the pressure of volatility that leads to poor investor decisions. I won't touch upon in great detail, and Rob and John won't do too much of it during our presentation this evening, but behavioral economics and investor decision-making is something that we have covered a fair bit in our presentations previously. But in short, it's volatility of returns we know can be dramatically reduced with proper diversification. This is an image for our longtime clients, some of you who have been with us 20 years, that's probably all too familiar. But it's as important today as it's ever been. A well-constructed, institutional, pension-style portfolio that focuses on diversifying outside of the traditional publicly traded stocks and bonds, but also has an emphasis on income and cash flow, can have a profound effect on mitigating volatility. Now, our speakers this evening. Our speakers, Rob Adel, John Nicola, they're going to delve into the unpredictability of what we might be faced with in 2015, from what has already occurred and what may yet to come. They'll touch on the bizarre activities that we're seeing in the world economies, and they'll also touch on the impact of the sinking price of oil. Now, if you think that it's just the unpredictability or the inevitability of cycles that we've seen over the past 20 years, just as I turn it over to Rob Adel right now, I'm going to leave you with an image of perhaps something to consider as to whether it's just been 20 years, the previous 20 years before that, or the next 20 years. I'll leave you with this, and I'll turn it over to you, Rob. Rob Adel, our Chief Investment Officer of Nicola Wealth Management.